Government is touting the new record in non-oil exports as a big deal, and perhaps rightly so. For decades, oil exports have been the main driver of the Nigerian economy. For long, government has invested heavily to diversify the economy and prop up the country's non-oil exports. The country's Export Promotion Council, NEPC, says the record $6.1 billion in 2025 is a clear indication that the government's diversification drive is working.
In volume terms, total non-oil exports stood at 8.02 metric tons, reflecting a 10% increase compared to 7.29 metric tons recorded the previous year. This growth in both value and volume demonstrates improved export activities across multiple value chains and market destinations.
According to the NEPC, Nigeria exported a total of 281 non-oil products across 120 countries in 2025. The products cut across agriculture, manufacturing and solid minerals. Leading the pack are products like cocoa, urea, cashew nuts, sesame seeds, aluminium ingots, copper and rubber, among others. Many have welcomed the development.
I think this growth was activated largely by the addition of agricultural commodities to our export regime. Products such as cocoa, sesame seeds, soybeans, and then improved processing of these commodities also added to the value chain.
We have to understand that this is a great, significant push for Nigeria, saying that we're also moving away significantly from oil exports, which has remained for a long time the most significant of our revenue source. So I would say that from a macroeconomic point of view, this is good news. It's worth celebrating, but it also calls significantly for deep thinking to see how we're going to make greater progress. Is this the best that we can do?
With Nigeria's foreign exchange market under strain for much of the past year, non-oil exports are increasingly being framed as part of the solution. The logic is simple: more exports, more dollar inflows, and less pressure on the naira.
If you see over the last few months, the rate has been quite stable. And so I believe that, yes, the export of our goods and services have contributed to balancing our FX situation in Nigeria. And I believe that we can do more. I believe because I understand that even when we look at the services that we have been rendering, especially many people here in Nigeria rendering services abroad, would say that we have not even scratched the surface, if I say that. And so I believe that there's a lot that we can do to still contribute more to our FX position. But yes, this figure is good and it contributes significantly to easing of the pressure on FX demand.
But while volumes are rising, Nigeria still exports mostly raw or lightly processed goods, limiting earnings and competitiveness. It's something many say has to change.
When the value chain is enhanced, there is more value. So there is a likelihood of, getting more in terms of revenue for those commodities. And especially when you add the dynamics in the market.
Authorities are hoping to consolidate on the figure and significantly drive up non-oil exports even further. The Nigerian Export Promotion Council says it is working in collaboration with other government agencies to mainstream informal trade, where a lot of exports take place but are not captured in official data. Deji Bademasi, CGTN, Lagos, Nigeria.
Well, let's now get some more details on this. We're now joined by Dr. Muda Yusuf. He's the CEO of the Center for the Promotion of Private Enterprises, and he joins us live now from Abuja. Great to have you on the show with us, as always, Doctor. And I'd like to start off with some more insight, or give us more of a sense of how significant this news is, that Nigeria's non-oil exports have hit historic highs. Do analysts view this as significant progress?
Yeah, it is a significant progress, because when we compare this to maybe 2 years ago, I'll be talking about close to 40% increase in non-oil revenue, which is very, very significant. and this is also a reflection of some of the outcomes of the reforms. Because what we have seen is that the returns on investment in non-oil exports had increased dramatically over the last 2 years, following the liberalization of the exchange rates and the reform in the foreign exchange market. So this in addition to the efforts to diversify, to improve productivity and so on. So it's quite remarkable. It's quite remarkable.
But is this advance solely because of the government's diversification efforts or drive, or are there other factors that are sort of driving this?
It's a combination of factors. First, there has been better commitment to diversification of our exports. There has been an increased momentum as far as manufactured export is concerned. But above all is the fact that because of the depreciation in the exchange rate, because between now and the last 2 years, we have seen a depreciation of almost 50% in our exchange rate. And normally, when the currency gets weakened, exports become more incentivized. It's a very great incentive for exports. So the returns on investment in exports has increased dramatically. So it's a combination of the productivity, the diversification, and the current economic reforms of government, and also efforts to encourage a lot more value addition, which is what is happening now. I mean, we are seeing a lot more exports of urea, fertilizer, aluminum ingots, shea butter, cocoa butter, and so on. So quite a lot of value addition initiatives is also taking place. So it's a combination of factors.
Right. And looking at some of those factors that you looked at, looking at some of those fundamentals that you mentioned are driving the growth in non-oil exports, do you think that this growth will be sustainable, aside from the government's reform efforts?
Well, it will be sustainable, and of course it can be sustained. Because for as long as the foreign exchange reform remains intact, and I don't see any risk of a policy reversal, that momentum in terms of the incentives it provides for exports will remain there. And beyond that, we are beginning to see some efforts coming, for instance, from Dangote Refinery, which is one of the largest refinery globally. In the next few months, we'll be seeing a major export push in the area of polypropylene, in the area of fertilizer. And already we are seeing even export of refined petroleum products. So in the next couple of months, we will see even a much bigger figure arising from the fact that the Dangote Refinery will now, appear in the picture, and we see a much bigger momentum as far as export is concerned.
Well, but what about other sectors like agriculture? Are there any particular sectors besides oil and gas, hydrocarbons, etc., fossil fuels? Are there any particular sectors that analysts do see as can become a major player in this drive to boost non-oil exports?
Well, Nigeria is also very strong in the services exports. Because most times when we report this data, we report merchandise exports. In services, we are also not doing badly. In financial services, in entertainment, tourism, film, video, so many areas in the area of services, even fintech. A whole lot is happening, especially among the younger generation. So we are doing a whole lot in the area of the digital and creative economy in terms of exports, although we have not properly captured the data around that. And we are beginning to see a lot more emphasis on resource-based industrialization. Because actually to be competitive globally, you have to leverage on the resources that you have. So in terms of industrial policy, there is a new focus now to promote resource-based industrialization. That way, you not only benefit the domestic economy more, you'll be a lot more competitive. So from a point of view of industrialization strategy, that will also impact on performance in the non-oil exports.
Well, we'll certainly be watching those numbers closely. As always, Doctor, thank you so much for joining us on the show. Of course, that was Dr. Muda Yusuf. He's the CEO of the Center for the Promotion of Private Enterprises in Nigeria.